today we're going to take a look at the real introduction to taxation. Of course, I must say that this introduction here, it's relevant for both level 2 taxation as well as level 3 taxation. And as we learned from the introduction or the introductory stage, the initial presentation or the slides or the video that we presented, we were made to understand that taxation is actually divided into different areas. Most importantly, divided into areas of tax administration, tax practice, and also international taxation. And so as we go along, every topic that you might pick will fall under one of these 3 sections or 3 categories. But the most important thing is that we have to first of all understand the precept, the laws governing taxation and for that matter tax system in Ghana. So in this presentation, we're going to take a look at the various elements or some aspects of tax administration as far as Ghana tax systems are concerned. So we begin by looking at, as we said earlier, what it means to say taxation, or what's the meaning of taxation, and as far as Ghana taxes are concerned, what does that mean to say that government is imposing taxes on its citizens or residents? Okay, so let me begin by saying or quoting what Albert said, and he says that tax is a fine paid for doing well, and of course a fine is rather a tax paid for doing wrong. Now what this definition simply means that government expects that taxpayers do well in terms of their bottom line, in terms of how much income they generate. And so as long as they generate as much income as possible, government is going to impose taxes on this your incomes. So government would always wish that taxpayers do well, make enough profits, make enough gains, make enough incomes, so that government would also generate as much taxes as possible. However, even though we taxpayers also prefer that we do well, we'd also wish that we pay as low taxes as possible. And that is why it's important for taxpayers usually have to plan well so that you end up avoiding payments of taxes or reduce the payments of your tax liabilities. And that's what it means to say that when you do well, you're going to pay the taxes. But of course, again, a fine can also be imposed when you go contrary to the provisions of the tax laws. And that's what it means to say that a fine is the tax that is paid for doing wrong. In other contemporary definition, taxation can also be defined as a process that government exacts compulsory sum on its citizens or residents for socio-economic purposes. Or otherwise, it's a compulsory contribution from persons to government to defray expenses incurred in the common interest of all without reference to special benefits or conferred. What that simply means is that, you know, every government in every civilized society has a number of roles, responsibilities, and goals and objectives. And for the government to be able to meet these goals or meet these objectives, it requires money. And so we that the government is providing those services for need to, pay for those expenses that have been incurred by the government on our behalf. And so that's what the definition says, that we need to pay to the government so that the government will be able to defray the expenses that are incurred. And these expenses are incurred not for particular interest or for group of people's or interest, but rather incurred in the interest of what the common good and number of what populace. Right. Now, in a modern era or in a modern community or state, there's what is called social contract. And a social contract simply means a contract between the government and her people. So in the case of Ghana, it's a contract between the government of Ghana and the people of what? Ghana. Now, every party to this contract has a role and has a right and has obligations or to pursue or to carry on. And so in as much as the government has rights and obligations, we the taxpayers, we the citizens, we the residents also have our rights and also have what? Obligations. Now, one of the obligations of the people, of course, as a party to the social contract, is to pay our taxes to the government. Remember, the first definition says that government would have to defray her expenses. And these expenses are usually incurred on behalf of what? Of us, of the citizen, of the resident. And so if you do not pay for these expenses, there's no way the government will be able to fulfill or carry on those objectives, carry on those responsibilities that's expected of her to, proceed with or to carry on with. Right. And so the question we need to find ourselves is that government, which is part of the social contract, what are the roles, what are the functions, what are the objectives that a government needs to play so that for both parties, we are good to go, and also ensure the smooth operation or smooth running of the government machinery or of the state, as it were. Right. So it's important for us to know the real funds or revenues that accrue to the government, so the government uses this revenue to meet its or meet her daily or routine operational expenses or costs, for that matter. Now, let's look at the roles that the government plays in a modern environment or in a modern economy. And one professor says that even though the payment of taxes is expensive, it's a cost to us, it's a burden to our pocket, it's a burden and equally increase our cost of living. If you also fail to pay the taxes, of course, the society, the community, the state will not be different from how a jungle looks like. So even though payment of taxes is a cost, it's a burden on us, we simply have to pay in order to make sure that the economy becomes a civilized society and not to look like that of what? Of a jungle. So for every government, these are the various roles that the government carries on, or these are the various objectives, both macro and micro, that the government pursues. You realize that most of the government, when they're campaigning for during the electionary period, they campaign on the basis of macro and some other microeconomic objectives. Both governments and every society tend to pursue this kind of economic objectives. And some of these objectives include one, provision of public goods. Now, public goods are goods that are consumed by majority of the people. They are goods that are consumed by majority of the populace. It's goods that are consumed by both the poor and the rich. Okay? So, example of public goods include schools, hospitals, roads, lights, water, security, and the likes. And of course, you can realize that if these goods are left in the hands of the private sector, that makes that only those who can afford can have access to these goods. And that to me to say that only the rich can have access to public goods. How many of us can afford to provide personal security or private security for ourselves? Only the rich probably can afford to do that. So it's important for the government to produce, or that are enjoyed by majority of the population, are produced or provided by the government itself. And like I said, it's important that we provide or pay for our taxes, provide for these public goods on our behalf. Another role that the government carries on is the internalization of externalities. And then we live in an economy where there are no more productive activities that are going on. We live in an economy that we interact with the external environment. Now, of course, it's important for the government to make sure that all those that are engaged in productive activities do not pollute the environment. The government will have to make sure that we live in a safer environment. And of course, internalizing and externalizing go to the extent of looking at the legal frameworks, the legal system in which what governs our daily conduct, what governs the way we live our lives. Of course, that is why mining companies are made to rehabilitate the land after their mining operations. There's one example why petroleum companies are made to decommission the seabed. In other words, what it means is that you are not allowed to dispose of your refuse, dispose of your waste anyhow. It's important that we created an enabling environment where we can live conducively in as much peaceful as possible. Government would also have to make sure that there's the utilization of resources. There's the full employment of resources. Of course, it's a government responsibility at large to make sure that factors of production are properly put to use, that labor gets to work, that land is put to use, that capital is put to use, and of course, entrepreneurs as well. Okay, so if we live in a community where government does not provide this enabling environment so that we get jobs after schools and the likes, obviously there's going to be a lot of social vices in the economy. There's going to be a lot of social vices in the country. So government makes sure that at the end of every period or at regular intervals, the environmental resources, the state resources are put to full utilization to create as much employment as possible. One other benefit again is price stability or price stabilization. In other words, we talk of inflation. Of course, one way to measure the standard of living of the people, of the citizen, is when the cost of living is kept as low as possible. And the only reason why to ensure that cost of living is kept low is there's a certainty of price or stability. If price of goods and services on a daily basis at regular intervals keep on rising, how many of us can keep the pace, or be at pace or be at the same level at which price of goods and services are rising? So if there's continuous rise in price of goods and services in the society, in the community, in the state, only few people can afford. And that's definitely going to create a poor and declined standard of living for the citizens. So it's a duty, it's a mandate, it's a role of the government to ensure that price of goods and services as well as the currency is as much kept as stable as possible. Government again ensures there's economic growth. Government also regulates the open markets and also ensure income distribution, and as I said, ensure that there's a proper legal framework which guides our daily conduct, what guides the way we live, the way we behave in the society, just to ensure peace and harmony. Okay, right. Of course, entrepreneurs exist, companies exist to make their profit. And so in this case, I'm talking of regulation of the open market. Or government ensures that even though there's competition in the market, there's competition in the country, but the competition is kept as healthy as possible. Government will have to make sure that even though entrepreneurs set up their business to make their profit for themselves, but of course they do not make abnormal profit. Of course, they not cheat the citizens, they do not cheat consumers. Government will have to make sure that price of goods and services are regulated, so that one person or one individual does not take advantage to make the society. Of course, it's not surprising that when ECG or when Ghana Water want to increase their prices, even though their monopoly or they operate in a monopolistic environment, government would always have to intervene. Because if government does not intervene, these goods such as lights and water are of necessity. So if you allow this institution to increase their prices anyhow without recourse to how and how many of the citizens can afford, obviously, that is going to throw the whole economy into chaos. So it's important for the government to ensure that the market in which various businesses operate are properly regulated. Right. So these are some of the roles, these are some of the objectives that every government seeks to achieve. So you're saying that the definition, as we saw before earlier on, which says that we need to pay these compulsory sums so that government is able to meet her expenditure. And of course, these expenditures are incurred in the area of ensuring that these economic objectives, these economic benefits are actually achieved by the government on behalf of the government, also on behalf of the people of the state or the country. Right. Now, what we need to find out is this. Indeed, the government will have to collect the taxes. Government will have to raise the revenues to meet those objectives as discussed earlier on. Now, the question is to ask ourselves, so how does the government, or where does the government raise the revenues? Where does the government raise the money to fund her expenses? There are so many avenues through which government raises the revenues. There are so many ways that the government will generate her income. Are divided into two categories. We have tax revenues, in other words, revenues that are coming from taxation, the imposition of the compulsory levies, and those that are coming from optional avenues, otherwise referred to as the non-tax revenues. Now, the example of the non-tax revenue can come in the form of borrowing. Either government is taking loan from the domestic markets, the domestic financial markets, or government is taking from the external the external financial markets. Okay, government can also borrow or take generate non-tax revenue in the form of grants, like gifts from maybe other foreign governments, other foreign agencies. Government also generate revenue from fines, let's say example, police fine or court fines. Government also does invest in other investment opportunities. So government generates investment incomes, and also goes to the extent of where government may realize or sell surplus assets of the state which may not be of need at the moment. All right. So these are the non-tax revenue the government generates in addition to the tax revenues also generated by the government. Right. Now, for every enterprise, such as a government, for you to operate normally, for it to ensure law and order, for it to ensure that people live in accordance with the laid down procedures and regulations and laws, and for that matter, it's important that government operates within certain policies. Just like individuals may have policies, just like corporate enterprises may also have policies, government, on the other hand, also has policies. So for every government regulation framework, there is existence of policies. Now, what are policies? When you say policy, simply means the framework or the systems that guide the direction of an entity on a daily basis. So in this case, the entity could also mean a government. Or they simply represent how the government manage the economy on a daily basis using the various economic policies. Now, policies that a government may adopt basically are made up of two. We have fiscal policies and monetary policies. So these are the policies that are aimed at helping the government to achieve her macro and microeconomic targets or macroeconomic objectives or goals, either in the short term, in the medium term, or in the long term. Right. Now let's take a look at how these policies work together and how they work together to achieve the relevant objectives, or how they can be contrasted accordingly or as well. Right. Now, when you say monetary policies are usually regulated or usually implemented by the Central Bank of Ghana. Or in the case of elsewhere, it is regulated or implemented or administered by the Central Bank of that particular state. So monetary policies are simply policies that are usually adopted by the Bank of any economy, which are used to regulate the supply of money and demand for money in that economy. The supply of money simply means the amount of money in broader terms that are circulating in the economy. Okay, so how many of the city notes, how many of the papers, how many of other form of liquid asset or cash or money that are circulating in the economy. That explains the supply of money. But to what extent do people also demand for money? Okay, so when you talk of demand for money, it simply explains how much of your wealth is held in cash terms, how much of your income is held in cash terms as compared to holding the same cash in investment terms. So oftentimes people convert their investments, convert their wealth into cash, is what explains the demand for money. At every point in time, we expected that the supply of money must be in line with the demand for money so that the economy will be at an equilibrium state. So most importantly, these monetary policies, which are adopted by the Central Bank of Ghana, is mainly meant for ensuring price or stability. In other words, to control inflation. Okay, so if the economy is at a stabilized position or is an equilibrium position, there's no recourse to any kind of inflation or price instability. So we will normally, or the central bank will normally adopt these policies in times when they foresee that the economy is moving or shifted or is moving to an imbalanced position or moving into a disequilibrium position. So when the economy is in a disequilibrium position or when it's shifted, when there's an imbalance, how does the government come in to use these monetary policies? For instance, when there's inflation, like I said, the main essence of the monetary policies are meant to control inflation. It's meant to regulate the supply of money and also demand for money. So when there's an economic shift such that there's price or the prices instability, in other words, there's inflation, the central bank may come in using these monetary policies to bring the economy back to its normal state, to bring the economy back to its equilibrium state. So now here, if there's inflation, every time you want to deal with inflation, it's important for you to know the cause of inflation. It's important for you to know what really triggered that economic imbalance resulting in the inflation. Right. Of course, inflation means the continuous rise in the average price of goods and services at regular or at routine interval over a period of time. Okay. Now, the reverse of inflation is deflation. So whilst prices are rising, referred to as inflation, the decline in prices of goods and services rather referred to as deflation. Deflation, inflation, both result in economic imbalances. In either case, the government can come in, the Central Bank of Ghana can come in using the monetary policies to curb that situation. So like I'm saying, if there's inflation, how does the government use the monetary policy? How does the government use those policies to control that kind of inflation? All right. Now, if, for instance, like I said, you must always understand the cause of inflation. So inflation may be caused by so many factors, but all these factors can fall under two categories. Either it is demand pull inflation or cost push inflation. Demand pull inflation or cost push inflation. Inflation means price of goods and services are rising. So when you say demand pull inflation, in simple terms, it simply means that there's so much demand for money. People have so much money available to themselves. People have so much, have higher purchasing power or disposable income as compared to the availability of goods and services for which these monies, for which these cash are meant for. So if there's so much money in the economies as compared to the availability of goods and services, then it means that those goods and services are scarce, more or less. Okay, so now it will only be made available to those who have the purchasing power to pay. So in this case, it becomes like for the highest bidder. So it means that if it's for the highest bidder, more people, or we're going to have a number of higher or so much higher bids to get access to the same available goods and services. So if you are bidding as much high as possible, it's going to trigger rising price of goods and services. And of course, if it's going to be in the form of rising price of goods and services, it's going to be in the form of bidding so much higher in order to get access to the same quantity of goods and services available. The obviously means that it's going to go in favor of the rich as against the poor. So the rich gets richer, get access to the limited goods and services, and the poor are going to be denied. access to these goods and what services. Okay, so here, if there's this kind of inflation, demand pull inflation, what a central bank can do is to use those open market operations. Okay, so what the government simply does is that the government comes into the market to take away the excess liquidity, to mop up the excess or liquidity. So here, the excess liquidity using the open market operation simply here means that the government comes here, for instance, to sell treasury bills, to sell investment or instrument. So if government sells treasury bills, what it means is that when those who are having access to those funds, those who are having access to that extra liquidity come in to buy those who are treasury bills, they reduce their purchasing power. It's reduced the amount of money that's available for them for consumption. So if the amount available, the amount that is available for consumption is declined, is reduced. That means that it has reduced your purchasing power. So in this case, if your purchasing power is reduced, what does that mean? It means that you can no longer go to bid for higher oil prices. And so as much as there's the money, the amount of money that you have is reduced, that means that more or less it's going to be in line with available goods and services. On that note, the price rise would be expected to come down. In other words, the economy which has shifted beyond what borders, which has shifted beyond expectation, will now be restated to come to a restored position, and that's going to curb inflation. In other words, if there's a reversal of deflation, like the first instance where government sells treasury bills to us, sells other form of instrument to us, financial instrument to us, which reduces the amount of money that's available to us. In the case of deflation, government rather comes in to buy back. Otherwise referred to as quantitative easing. Also, if the government comes to buy back those instruments from us, it rather puts so much money in our pocket. It increases the amount of money that's available to us. It also increases our purchasing power. So in that case, it's going to trigger, brisk economic activities, and that's going to bring the price of goods and services a little up. And so if the price of goods and services a little up, it also motivates the producers to produce more. Don't forget that for producers, the motivating factor is price. So no producer will be willing to produce at a lower price. So if price of goods and services are triggered to go up, producer will be motivated to produce as much as possible. Government can also decide to use monetary policy rates. Whenever government decides to grow the economy or to reduce the excess growth in the economy, monetary policy rates such as interest rates, can be used to trigger a shift upwards or downwards. Otherwise referred to as inflationary gap or deflationary gap. So in this case, if there's an inflationary gap, in other words, like I said, the price of goods and services are rising, how does the government come in? Of course, what it means that price of goods and services are rising because people have a lot of purchasing power. The government can simply come in to increase the rates of interest. So if the policy rate is increased, it reduces access to credit. Because if people do not have access to credit to borrow, for consumption or for whatever form, obviously, it makes that it's going to reduce the amount of money that will be in circulation. And of course, if the amount of money is in circulation reduced, it's equally going to reduce your purchasing power, and that's going to curb the issue of any kind of inflationary gap. And the reverse is true for deflationary gap. So if there's deflation again, government will come in to reduce the policy rate. Like in recent time when the COVID was set in, what the central bank did in order to ensure that there's brisk economic activities, in order for the government the government to ensure that there's the boom of economic activities, what they simply did was to reduce the policy rate to a carry of 14%. So it means that when the policy rate is reduced to 14%, it gives access to credit. And of course, if there's access to credit, it helps you and I to go to the bank to borrow for our consumption purposes or for investment purposes. So you can go to the bank to borrow for personal consumption or for investment purposes. Of course, so if there's an avenue to borrow, government can use that to grow the economy or to reduce excessive growth, which may trigger inflation in that economy. All right, so that's one aspect of monetary policy which are normally implemented by the central bank. But it must be mentioned that the inflation target, which is pursued by the Central Bank of Ghana, the target is actually set by the central government. So in this case, I can say that the MPB government represents the central government. So every year, you realize that whenever the government is reading the budgets, the government thus mention or state the macroeconomic target when it comes to issue of inflation. So for instance, in the case of recent year, we have 8% plus or minus 2%. And that's a target that's expected to be achieved by the end of the year. Even though there's a target that's expected to be achieved by the central government, the MPB government of the day, the implementation, the oversight is given to the Bank of Ghana, of course, using their monetary policies. So the Central Bank of Ghana is also implementing policies in such a way that by the end of the year, as expected, the central government would have achieved her macroeconomic target in the area of inflation at 8% plus or minus 2%. Right. Now, other policies, like you said, are the fiscal policies. Of course, so we're talking about two policies, the monetary policies and the fiscal policies. Each of these are the mandates of the state as a whole. But the monetary policies are left in the hands of the Central Bank of Ghana. However, the fiscal policies are rather implemented or is overseen by the central government of the day. Now, when we talk of fiscal policies, they are policies regarding government revenue mobilization and government expenditure. We are looking at how government raises revenues, how government is going to expend these revenues. Okay, so the revenue mobilization and the expending of these revenues are what defines to explain the fiscal policies. Okay, now, just like the monetary policies, we can also use the fiscal policies to pursue those macroeconomic agenda. We can use these fiscal policies and monetary policies to pursue those macroeconomic objectives. Okay, so be it as is control inflation, be it as in creating of employment, be it as in regulation of the economy or regulation of the market, be it as in economic growth, and all those other economic objectives. So it's either you are using the macroeconomic policies, the monetary policies, or using the fiscal policies, or using both of them at the same time. So it depends. They all work together. They all work as a team. They support each other. All right, they complement each other. Let me say it that way. Right. Now, with respect to the fiscal policies, there are two forms of fiscal policies. We have what is called the automatic stabilizers and also the discretionary policies. The automatic stabilizers and the discretionary policy. So it means that we can have some part of the fiscal policy which are automatic, which adjust by themselves, and have those that require government intervention. So let's take a look at what each of them represent. Now, automatic fiscal stabilization policy simply means policies that by themselves correct or restore any economic imbalance without any form of government intervention. Or in most cases, government may not have to intervene. Now, what that simply means is that, the fiscal policies are policies to generate revenues and also to spend these revenues. Whatever the target of the government is, either to raise more revenues, spend less, spend more, raise less revenue, or to balance the two, to have a zero balance at the end of the period, it's meant to make sure that there's always economic imbalance. Now, of course, we cannot always have economic balance. Who expected that COVID would have set in at early parts of the year? Nobody expected that. Nobody anticipated it. But of course, once it's set in, it's resulted in economic imbalances. Who might have expected that we have budgeted to produce number of goods and services, but something might set in which may result in decline in the production of goods and services, which may trigger inflation of a sort? Who may have estimated that, well, we have made provision to create employment, but things may have gone wrong for us. We are not able to meet that employment or target. So the economy, even though you would have budgeted, even though you would have anticipated things may go right within certain assumption, within certain remit, of course, nobody can predict tomorrow. So things may go wrong, things may go the way as not expected, and that may result in economic imbalances. So whenever there's an economic imbalance, maybe there's an unemployment, there's inflation, there's economic decline, we're expecting economic growth, but there's recession, there's the externalization of the economy. All so many things that is in disfavor of the economy. Or it can also go in the positive direction. All these results in our economic imbalances. So when there's these economic imbalances, we may have policy or should have policies that should automatically bring the economy back to its normal footing. That should automatically restore the economy to its normal position. In other words, the government may not have to intervene. For instance, the progressive nature of taxation in Ghana is an example of an automatic fiscal stabilizer. What that simply means, of course, if there's inflation resulting in from more, people having increasing income, okay, people have a lot of available or disposable income. If your income level is rising all of a sudden, it may trigger inflation, because we are saying that demand pull inflation, the type of inflation, what results in the fact that people having more money than available goods and services. And so on what basis will people have more money than the available goods and services? One way is the fact that your employment income have increased. And so when your employment income increases as against the availability of goods and services, what happens? It's going to trigger for the highest bidder. So for the highest bidder, that will trigger a price hike or price rise over a period of time. So if we have a progressive tax rate in the economy, in the system which is operating properly, what it means that in as much as people will earn more, this progressive nature of tax is also going to put so much tax on your income. So even though you're earning more, you're also going to pay more taxes. And so for that matter, once you're paying more taxes, it's going to reduce your available income. It's going to reduce your disposable income. So it means that it would indirectly or directly bring the economy back to its normal state. It will not even allow the triggering of that kind of demand pull inflation. And that's what I mean to say automatic fiscal stabilization policies. Other than that, if these policies do not work, if you're unable to use the policies themselves to correct the imbalances, then it will require government intervention. And of course, the government intervention is what refers to as the discretionary policies. So here, the discretionary policies are used by the government to restore normalcy in times of shift from the equilibrium point. So here, what means that unlike the automatic stabilization, government will always have to intervene deliberately in order to ensure that there's that normalcy in the economy. Example. It should be expected that when people graduate, there should be available work for them. And so if there's availability of work for them, that should reduce the level of employment in the economy, in the state. Is that not it? Correct. But of course, is that the case? That's not the case. We graduate from various institutions and there are no works available for us. Neither has the government created enabling environments such as access to cheaper credit for us to start our own jobs. It's not available. So in as much as we graduate, we go to school and come out of school, there are no jobs available for us. What does the government have to do? We do not have fiscal automatic stabilization policy that would automatically absorb people into the private sector or to the employment sector. We keep on having unemployment growing at a faster rate in this economy. So what the government does is that the government would have to intervene directly. So a typical example is what the government is using as NAPCO. Okay, so the NAPCO is simply to create some form of temporary employment for the graduate unemployment, just so to reduce the number of unemployment in the economy. Another example is why you have one district, one factory. Okay, so one district, one factory here means that, of course, government may not create a jobs, may not create a factories, may not build a factory by herself, but in partnership with the private sector, these factories are either upgraded, these factories are either started from the scratch. So once the government has intervened in this regard, what it means is that it's also going to help reduce the graduate unemployment in this economy. So every time the government comes in to correct the imbalance in that economy, we are saying that the government is using the discretionary policies. Other than that, the government is using what is called the automatic stabilization policies. Right. Now, let's look at, as we saw earlier, we got to know, we got notice of the government revenue was success and what government really used these revenues for. We're going to take our time to look at the various sources of revenues again much more in detail. So we're going to begin by looking at tax revenues, and for that matter, the purpose of tax revenues. Now we said that tax is the process whereby the state or government exact contribution from each citizen or resident of each territory for maintenance of the state or machinery. Let me say it this way. Tax is a compulsory sum, not refundable amount, which the government uses to provide socio-economic purposes. So one thing you have to know is that tax is a compulsory payment. Tax is a compulsory sum. Tax is a compulsory amount. The compulsory nature of tax simply means that it is backed by law. It's a legal payment. So anyone who fails to pay the taxes within the context of the law can be subject to a fine, can be subject to interest, can be subject to imprisonment. So it's important for you to know that tax compulsory nature is simply because it is backed by law. Again, tax is not a loan to the government, so it is not refundable. So nobody pays taxes to the government expecting the government to pay back those monies to him or her or to any other enterprise. And then again, it's also important for you to know that tax are not meant to provide benefit for a special class of people. Tax is not meant to provide benefit for a special group of people or for a special individual. It's meant to provide benefit for the entire society. So construction of roads is accessible to all. Construction of hospitals is accessible to all. Construction of schools is accessible to all. So all these public goods, all other benefits are meant for the interest of a common good other than for a particular class of people. Now, why does the government impose taxes? Of course, we are saying that the government imposes taxes to meet those economic objectives. Government imposes taxes to meet her expenses with respect to her machinery, right? Now, in other taxes, it can be categorized into two. We have the revenue benefit, what simply means that government imposes tax to raise revenue for whatever purpose. And also, government raises taxes for non-revenue purposes. Of course, the non-revenue purposes of benefit can be divided into two: social benefits and also economic intent or economic benefits. And this social and economic benefits is divided into two. For instance, when it takes social benefit, it is meant to provide public goods. Public goods. We already know what public goods are. Goods that are consumed by a number of populace. Another example of social benefits is to ensure the curtailment of the consumption of certain harmful goods. Example, tobacco, or narcotics, or cigar, or whatever or alcohol. So any product that the government perceives to be of harmful effect to the health of the human body, government can use taxation to help curtail the consumption of those kind of goods. Now, how does the government do so? Of course, government doesn't want you to consume those goods. So the government is going to make sure that the price of these goods are higher by imposing a lot of tax on this kind of consumption. All right. Of course, if you take tobacco, for instance, they pay as much tax as 50%. Yes, we still consume. Economists advise us that whenever you want to use tax as an instrument to deal with the curtailment of consumption of certain harmful goods, it's also important for you to consider the elasticity of demand of this product. Of course, tobacco is such that it's normally faced with the price inelastic. Okay, so price inelastic means that no matter what the price is, no matter how much you have hiked the price, the people will still consume this good because they have simply become addicted to this kind of commodities. Of course, deciding to close down or to shut this business may also not be of excellence to the economy, because even though you don't want some people to consume this product, if you shut down, you're affecting some other people's business. You're equally affecting the employment of some other persons. Right. Now, another importance in social terms is the income distribution. Of course, in every economy, it's important for the government to ensure fair and equitable distribution of income. An example of tax as an instrument to ensure this benefit is the use of the progressive tax system. Of course, government imposes high taxes on the higher income generating bracket and also lower taxes on the lower income generating bracket. So if you earn more, you pay more, and if you earn less, you pay less. And it's all in, if you're earning more and paying more, government will use those extra income generated to provide services that can equally be consumed by those who are earning less. And that's what I mean to say income redistribution in the society. The economic importance of benefits is to ensure price stability, or to control inflation, and also to reduce interest rates or to reduce inflation as well. Right. Now, so if government wants to reduce inflation, just like the use of the monetary policy, government can come and use taxes. And of course, we must understand the cause of inflation. If inflation is caused by the fact that people have a lot of money, therefore resulting in demand pull inflation, government comes in to impose more taxes in order to reduce your purchasing power. Again, if inflation is coming from cost push, because price of goods and services are rising, simply because so much tax on this commodity, on these factors of production, government may have to come in to reduce the incidence of burden on this kind of factors of production or supplies. So example, you realize that every time government imposes taxes on fuel or crude oil product or crude product, you realize that because the crude, first of all, is consumed by a number of people. Two, it's a factor of production because we use the crude to power assets. We use the crude to power plants. We use the crude to power production facilities. The rise or the imposition of tax on this crude product will trigger, rise in the prices, and of course that is going to have a pass-through effect. So if the price of crude is increased because of taxes, this increase in prices will be transferred to the final consumer, and that will result in inflation at regular intervals. So if government wants to control this inflation and realizing that the inflation mainly is coming from the fact that the price of crude is on the rise and there's a pass-through effect which is transferred to the final consumer, government may have to come in to take off some of these taxes so that it reduces the price of this factor of production, and that would eventually reduce the level of inflation that may be prevailing in the economy. So these are the social and economic benefits from the imposition of taxes. So again, you must know that the purpose of tax can be used for revenue purposes or revenue benefits and non-revenue benefits. And for the non-revenue benefits, it's either a social benefit or non-social benefit. And of course, the social benefit, like you said, is to help curtail the consumption of harmful goods, is for production of public goods, is to ensure income redistribution. And for the economic aspect, we can use that to ensure price stability. We can use that to reduce interest rate. Of course, we can also use taxes to create employment. Okay, so like government generating the revenues, government can use these revenues to set out factories. Of course, so if the factories are established from the raise of the tax revenue, of course, people get what work. In the same vein, government may decide to reduce the rate of tax on production what setups. Government can decide to reduce the rates of taxes on what enterprises. So it's assumed that if the rates of tax are reduced on enterprises, it creates some kind of headroom. It creates some kind of what extra cash, extra free cash flow. So those free cash flows, all things being equal, can be used by these entrepreneurs, can be used by these corporate entities to create jobs for those who have not been employed in the economy. All right, so these are the economic and the social benefits through which tax revenues may be used to achieved, all things being equal. All right. Now, taxes, as it were, can be divided into two. So you have two types of taxes, all things being equal. We have direct taxation and also indirect taxation. Now, when you say direct taxes versus indirect tax, the difference is that direct tax, all things being equal, are taxes which are direct, and indirect taxes are taxes which are indirect. In other words, in simple terms, what it means is that if taxes are meant for an individual A, and individual A is going to be the final bearer of the taxes, and the taxes are directly imposed on this individual A, okay? Now, said tax imposed on that individual A can be referred to as direct taxes. However, if the taxes are meant for individual A, but it has to go through individual B before it eventually get to individual A, then said tax can be referred to as indirect taxes. In simple terms, the difference between direct tax and indirect tax is the final bearer of the taxes, is the incidence of burden of that or those taxes. So if the incidence of burden, if the final consequences of the tax can be shifted to another person, so I impose taxes on you, or government imposes taxes on me, such as VAT, and I can transfer the taxes imposed on me for you to pay when you're consuming the final product, that becomes an indirect tax. But if government imposes taxes on, let's say, my employment income, of course, it's my own income. I will not transfer the income to another party. I will not supply a service in spite of that income to another party. So on that basis, I become the final bearer, the final consequence, or the final sufferer of the taxes. On that note, such tax can be referred to as direct taxes. So the key difference between direct tax and indirect tax is the incidence of burden. Is the consequence of who suffers the final cost of the taxes which have been imposed by the government. Right. So as we said, example of indirect taxes are VAT and customs and like the communication service tax, any other kind of taxes which can be transferred, which can be shifted, falls under indirect taxes. But any tax which cannot be shifted rather falls under direct taxes. Right. Now, let's look at the taxation in Ghana. So we have seen in the previous slide, no matter the tax that is imposed by the government, it is either a direct tax or indirect taxes. Now, if you look at the system of taxation in Ghana, direct taxes take the form of income taxes, more or less. And an example of income taxes are employment income taxes, business income taxes, and investment income taxes. And your indirect taxes are made up of value-added taxes as well as customs. Okay, so value-added tax are taxes that are imposed on consumption, are imposed on certain taxable supplies. And custom taxes or custom duties are simply taxes in respect of import duties, export duties, excise duties, and similar taxes of or like types of like that, right? Okay. Of course, when we look at the administration of taxation in Ghana, or the tax system in Ghana, value-added taxes and income taxes fall under what is called domestic tax revenue units. And like if you look at the administration of taxes in Ghana, the administration of taxes in Ghana is regulated or manned by the Ghana Revenue Authority. So the aspects of the Revenue Authority that is in charge of the income taxes and the value-added taxes is what referred to as the Domestic Tax Revenue Division, or the Domestic Tax Revenue Unit. And other than these two are the Custom Division. So if you look at the governance structure of the GRA, you realize that, of course, when you talk of governance structure, talking of the strategic direction and control of the GRA as an enterprise. Just like every other enterprise has a governance structure, GRA as an institution, as an entity, also has its own governance structure. Now, this governance structure simply here refers to the board membership or the governing board of GRA. Now, there are 9-member board of this GRA. Now, these 9 members are made up of the chairperson, also made up of the commissioner, which is acting as the commissioner general, which is acting as the chief executive officer. Now, the Commissioner General is assisted by three other commissioners. Of course, like I said, if you look at over here, we have the domestic tax revenue, and we also have the customs. So there are two other divisions that fall under the Commissioner General remit or mandate. But of course, the Commission of the Domestic Tax Revenue Unit or Division, and also the Commission for Customs, they are in charge of collection of the revenues. Okay, so just like every other enterprise, every entity's activities are divided into two. We have the primary activities and the secondary activities. So the primary activities are those activities that are involved directly in the organization activities. Okay, so let's say if you take ASPA for instance, all those activities that are in direct contribution to provision of the provision of the tuition falls under primary activities. But any other stuff like technical or like HR, they rather come under the secondary activities. So again, when it comes to the GRA structure, we have the primary activities which comprise of what? The Domestic Tax Revenue Authority Commissioner and also the Commissioner for the Customs. We also have another division which is in charge of what? Support services. Okay, so the support service normally is in charge of maybe administration, finance, HR, procurement, and the likes, other than generation of revenues that were directly for the state. The other members of the board are made up of the Governor of the Bank of Ghana or his deputy. We also have the Minister of Finance or the Deputy Minister of Finance, or any representative from the ministry, okay, not below the rank of a director. And we also have other 4 persons from the public. And these 4 persons from the public, 2 of which must be women. And that's what the law says. So these are the elements of the governance structure or the board formation of membership of the Ghana Revenue Authority. Right. Now, let's see the function of the authority. So the core amongst the functionality or the duties of this authority comprises the assessment and the collection of what? Taxes, the promotion of tax compliance and tax education, also made recommendation to the Minister of Revenue or Minister of Finance for that matter on revenue policies, and also make payment of taxes collected into the consolidated fund. Also would have to ensure that there's a combat of tax fraud and tax evasion. So it's important for the GRA to work to ensure that taxpayers do not defraud the state or do not evade the payment of what? Taxes, and also cooperate with other state agencies in provision, in pursuit of what? The objective of pursuit of their functions. So these are the core functions of the Ghana Revenue Authority. Right. For every good tax system in any economy, I mean, for a tax system to meet its internal purpose, for a tax system to meet its internal objective, for it to meet the reason why it is established and implemented, it's supposed to meet certain what features. Okay, so these features of those good tax systems are what refers to as the canons of taxation or the qualities of good tax systems. And basically, these features are made up of ensuring equity, fairness. What that means that taxpayers of the same level of income are supposed to pay, all things being equal, the same amount of what? Taxes. But taxpayers that belong to different pedestal, who have different income bracket or who belong to different income bracket, some have higher incomes, some have lower incomes. The more incomes you have, the more you pay, and the less or lower incomes you have, the lesser you pay. So you have what is called horizontal equity or horizontal fairness, and also vertical fairness. So horizontal means that 2 taxpayers or taxpayers at the same level pay the same amount of taxes, and vertical equity means that taxpayers with different levels of income pay different level of what? Taxes. Neutral here means that the tax administration system should not affect economic choices. So if I want to go into this business or that business, tax should not be the reason why I have to go into that kind of business. But of course, if you look at how our system or the Ghana system system is structured, it's obvious that the neutrality is not really met. In other words, some people go into that business and able to optimize their tax liabilities better than they enter into other kind of industries or sectors. But it's better that if the business are in the same sector, then of course the rate of tax should be the same. Right. Economy. Of course, the mandate of GRA is to collect taxes on behalf of the government. The mandate of GRA is not to collect those revenue on their behalf. So it's expected that the amount of expenditure or cost incurred in generating this revenue should not be so high. It should be kept as minimal as possible, so that the greater part of the income generated will go to the state, which the state will use to meet its state machinery. And definitely, the system of tax must also be of certainty. So certainty here means that it should make it easier for self-assessment by taxpayers. Taxpayers should be able to look into the law and determine their own tax liabilities. Taxpayers should always be certain that they are liable to pay taxes, and taxpayers should not be in a state of confusion. They should not be in a state of what ambiguity. They should be willing and have the capacity to pay the taxes. I mean, without any kind of force or without any kind of imposition of a sort. Okay, so they should be able to determine their own tax liability with all level of certainty and what accuracy, and be self-compliant and pay the taxes accordingly to the state's what authority. Of course, so basically, these are the 4 key canons or features of a good tax system that every state, every civilized society may have to make sure that a tax economy or a tax system would exhibit, as it were. Right. While likely so, from the governance structure, the Commissioner General is the CEO of the Ghana Revenue Authority. And as the CEO, he has certain mandates, he has certain powers, and he has certain what functions. So you're going to take a look at some of these functions and the powers of the Commissioner General. It's important for you to know what the Commissioner General can do and what he cannot do. It's also important for you to know how to communicate well with the Commissioner General. So either you're writing paper 2 taxation or paper 3 taxation. Especially for paper 3, it's important for you to know what the Commissioner General does and how you can best relate with the Commissioner General. Because as a consultant, you must always understand and know the lines of communication between you and your the Commissioner General, whom you always going to have interaction with from time to time. All right, good. Now, the functions of this Commissioner General or the Commissioner General or the powers include 1, the issue of practice or note. The issue of practice note. We expect that a taxpayer must be certain about his or her tax liabilities. And one of the ways for taxpayer to be much certain of his or her tax liabilities is to become certain, is to know how to apply the laws of what? The rules of engagement, the laws of what? Taxation. And one way to simplify the act or to simplify the laws governing the taxation is where the Commission comes to issue practice what note. So the practice note here simply means the interpretation what is said by the Commissioner General in respect to the Parents' Word Act. So you see, when you look at the Parent Act, the wording may be confusing. The wording may not easily be understood. So to simplify the wording of the Act, the Commissioner General comes to explain that in simple language and simple terms to avoid any form of ambiguity. So that interpretation, that explanation, that note issued by the Commissioner General from time to time is what referred to as the practice word note. So there are various aspects of the law which the Commissioner General has issued practice word note. So if you want to find the tax implication, want to know how to apply certain aspect of the law, you can simply have to refer to the practice notes issued by the Commissioner General. But I must state that the practice note is not by force, it's not compulsory, it's not mandated, it's not binding on the taxpayer. A taxpayer may decide to go in line with the practice note or may decide to ignore, because it's the interpretation of the act does not fall on the Commissioner General. It's rather the court that has the power to interpret every aspect of what our Ghanaian laws or act. Again, another power that the Commissioner may exhibit or carry on with is the power to private ruling or power to class word ruling. Okay, so when I talk of ruling, it's just like going to the court where the court gives ruling on a certain word case. In similar vein, the Commissioner General is seated like a high court judge, like a judge of a sort in his own court. Okay, so yeah, what means that if you are a taxpayer embarking on a certain transaction where you are not certain of the tax implication of that transaction, you can simply apply to the Commissioner General to give his or her verdict regarding that transaction, trying to know what should be the tax implication on that transaction that you intend to carry on with. So the ruling that the Commissioner General might give you as an individual or class of persons is what referred to as a private ruling or the class word ruling. Again, a private ruling or class ruling is not binding on the taxpayer. It is only binding on the Commissioner General. So if the taxpayer still believes that or has reason to doubt that the ruling given by the Commissioner is not fair or does not sit well with you as a taxpayer, you all have every right to apply to the court for proper interpretation of that aspect of the law. Okay, all right. So the ruling is to individual as private ruling or to group of persons as class what ruling. Now, it's important for you to know that whenever you're applying for ruling, you need to comply with these conditions. First, it must be an application to the Commissioner. So it must be formally headed or it must be written as a formal application to the Commissioner by the taxpayer. Again, the essence of you applying for that private ruling must not be on the premise, must not be on the basis of trying to avoid taxes. No. If the Commissioner General has a reason to believe that the reason for you applying for the ruling is just so you can have a leeway to avoid payment of taxes as due, then the Commissioner is not going to give that kind of ruling. It's going to ignore your application. Again, your application must be based on fact. No hypothetical scenarios are allowed. So you don't write an application in the context of the application stated, assuming this and this and that happened. The commissioner will not listen to that kind of application. It must be a real factual transaction which you are yet to embark on, giving all documents to that effect before the commissioner is going to give that word ruling. So it must be based on what fact, it must be based on what truth. Again, the law also requires that the taxpayer must give his or her legal opinion or state what he or she thinks about the transaction and what he believes the tax laws expect him to pay as well taxes. Again, we must be on the same page. So you don't just write to me as a commissioner trying to test my mind. Tell me what you also think is the position of the law and tell me what the law says I should pay as taxes as far as the transaction in question is what concerned. So you must present all facts of transaction. Do not leave any element word out, because if the commissioner at a later point become aware that certain elements materially were left in your application, then a previous private ruling can be set what? Aside. Will no longer have any power to take what? Effect. Right. Another power of the commissioner is to compound offenses. Compounding offenses. Well, from time to time, we taxpayers commit offenses against we commit infraction of what? The laws, the tax law for that matter. Okay, so when we commit any form of infraction against the laws or the provisions of the act, we become liable to pay penalties, to pay what? Interest. We become liable to be sanctioned by the Commissioner General, because the Commissioner General has the power to sanction any taxpayer who may go contrary to the provisions of the act. At worst, that you can be taken to court, it can be what? In prison for that matter, by infracting on the provision of what? Of the act. However, like I said, the Commissioner General more or less is also like a judge, sitting in his own court. So the law says that the Commissioner General can compound your offenses. So compounding your offense here means that an offense has been committed, let's say for instance, for non-payment of taxes. So the compounding of that non-payment of tax as an offense can include where the Commissioner may decide to impose interest or may decide to pay what? Impose penalty on the amount of taxes what? Not paid or infracted upon. Now, before the Commissioner will compound offense, you must note that you would have to apply to the Commissioner to compound for your offenses. You must first of all admit that an offense has been what? Compound. An offense has been what? Committed. If you do not admit that an offense has been committed and therefore asking the Commissioner to what? Compound those offenses, then the Commissioner has no right to compound any kind of offenses. You can at best be taken to court for any court what? Sanctions, all things being equal. So every time you feel an offense has been committed and you don't want any court implications, the right thing to do, the right step to do is to apply for compounding of offenses, simply admitting to the Commissioner and asking the Commissioner to impose whatever tax liability, whatever interest, whatever penalties that ought to be what? Imposed, just to avoid any kind of court sanctions or any kind of what? Imprisonment, all things being equal. It's important for you to know that the following offenses may not be result in compounding offenses. Example, when an officer or public official is acting in official capacity, or any offense committed against any tax officer. These issues do not result in compounding offenses by the Commissioner. Okay, so the only time an offense can be compounded is in respect of what? Tax laws, and in respect of non-payment of taxes, or any form of offense that's committed in the context of what? The tax laws, resulting to non-payment or underpayment of what? Tax liabilities. Right. Other powers include the remission of taxes or interest or penalties. It's important for you to know that all these powers that I have mentioned are powers that cannot be adopted by any other officer except the Commissioner General alone. Of course, when you say Commissioner in the context of the act, you are referring to the Commissioner General. Now, remission of taxes, interest, or penalties simply means that where your interest, where your penalties, or where any amount of taxes due can be set aside in full or part. That, well, even though you are supposed to pay this amount of taxes, even though you're supposed to pay this amount of interest or penalties, but for whatever reason, the Commissioner is exercising the power to say, do not pay those taxes, do not pay those interests, do not pay those penalties. In fact, your sins have been forgiven. Your liability have been what? Forgiven. Go and sin no more. But before this remission powers can be what? Can be exercised or can be adopted, there are two main conditions that must be present before the Commissioner will find it deemed equitable and appropriate to do so. Because see, it's important to ensure what? Fairness. So it's not like Commissioner will use his own discretion to sit in his office to say that your sins have been forgiven. You must exhibit a reasonable cause for which the remission of taxes can be what? Applied. So one of those conditions include impossibility for collection. So when the commission feels or believes or has reason to believe that, well, it's impossible to collect any amount of taxes due or any amount of interest due or penalty due, then of course going to remission you of those who are taxes. So the remission of this tax and this condition can be, for instance, you have going concern issues. Maybe the company is undergoing liquidation or bankruptcy, or the taxpayer's death, or there's a natural disaster affecting your business, such as maybe flood or fire has gutted your premises, and that's making it difficult to raise money to pay the taxes. Or we are finding it difficult to trace the taxpayer. We can't find a taxpayer. The taxpayer gone missing. We can't find him, of course. And maybe there's a decline in the taxpayer's income, making it difficult for the taxpayer even to meet his basic needs. So maybe over the years you are doing well, you're able to afford your social needs, your basic needs, and all sorts of things. Except that in recent times, your income have declined so drastically, materially, to the extent that you cannot even afford the 3 square meters. In this case, the commission feels or has reason to believe that it's that impossible for him or her to collect the taxes on behalf of what? The government. The second reason when a good cause is shown, okay? So good cause shown include the fact that, well, you have submitted all your tax return over the years. All taxes due have been settled, you have made satisfactory arrangement with the commissioner to settle in future, or you have no history of evidence of non-compliance, or maybe you were sick, you were absent in Ghana, or maybe any other reasonable cause was shown. Okay, so these are the 2 reasons under which the commissioner may decide to remission any taxpayer of tax or liabilities. One is the impossibility for collection because of death, going concern, inability to know the customer or the taxpayer, income decline, and then 2, a reasonable cause was shown in respect of having complied with every aspect of your tax obligations. Right. Let's have these few issues regarding the the powers of the commissioner. For some of these ones can be exercised by any other officer of what? Of the tax laws. Okay, so yeah, you may not have to apply directly to the commissioner, but any officer, deputy, or other commissioner can exercise these kind of powers. An example is what the tax clearance certificate. Tax clearance certificate. So, as the name implies, it's a certificate that clears you of any outstanding taxes. It's a certificate that certifies the fact, or that certifies that all your taxes have been paid, or you have made an arrangement satisfactorily. They're going to settle these outstanding taxes in future. Okay, so just like when you go to school, before the certificate can be given to you upon completion, you must give in a clearance certificate or a clearance something. So that clearance simply means that, well, as far as your obligation to the school is concerned or are concerned, you have settled them and have settled them in full. Or otherwise, you have entered into an arrangement to settle them at a later date, which is satisfactorily to the commissioner. Now, these are the conditions under which the TCC or tax clearance can be issued. Of course, when you are clearing goods in commercial quantities at the port, when you are bidding or looking for government contracts, or when you're registering title on a landed property. So when you buy land and going to register your title or title deed on that land, you may also have to issue or show tax clearance certificate. Or any foreigner who is leaving the country, alien departing the country, may also have to prove that he or she has paid all his tax liability through the tax clearance certificate. And finally, for us, the professionals, we must also show they have paid our taxes before our practicing certificate can be renewed. They also have what is called tax credit certificate. We have what is called withholding taxes. Now, withholding taxes are taxes that are paid upfront. Okay, so when you carry on a certain transaction, the person who is supposed to pay for the service of the services or the goods that you have supplied, that individual may withhold taxes and pay on your behalf to the Commissioner General. Now, what's the evidence to show that, yes, when you supply goods to X Limited deducted certain taxes from you and paid on your behalf to GRA. X Limited would have to go to GRA and request for a tax credit certificate to you. Okay, so anytime GRA comes for inspection, instead of your taxes paid, you can show an evidence on that tax credit certificate. Yes, indeed, over the period, with all the transactions that you made with this kind of enterprises, certain taxes were withheld, and these are the evidence of the taxes were paid so far. So if you have to pay any taxes to the GRA, the amount of taxes paid upfront as withholding taxes will be credited to you as taxes paid in advance. And that's going to reduce your amount of taxes that are payable by the end of your basis period, all things being equal. So we're going to end it here as far as an aspect of tax administration was concerned, and continue from our next presentation looking at issues of tax assessment, the types of tax assessment, the benefits of tax assessment, and other penalty rules with respect to tax assessment, and we take it up from there. So as far as this presentation is concerned, we're going to end it up today and continue from another time. Thank you for watching and thank you for listening. Right.
Thank you for watching another video from Aspire Professional Consult. For more of these videos and audio lectures, you can join our e-learning program by downloading our app on both Android and iOS. For those of you who want to join our classroom lecture, you can also join us on both weekends and weekdays, either at Kwabenya for the weekends and Accra Central at the Hockey Stadium for the weekday. And also, we give you an opportunity to buy books from our published house, that's Aspire Publication, by dialing the following numbers provided on your screen. Thank you, and see you in our next section.